Hello and welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra. Well, the Nifty managed to extend gains for 4 straight sessions and has also managed to close above the 19,600 mark yesterday. However, the headline to start off your day with is that the Indian stocks are likely to pause and to consolidate on the weekly expiry day as traders digest a 3-day run-up on the Nifty and the rally in cash stocks that continues to stay unabated. Very good morning to all our viewers right here. Joining in also with me on this special edition is our guest for the day. Vineet Bolinchkar joins in. He's the head of research at Ventura Securities. Good morning to you, Vineet. Just like I was pointing out that the Nifty has remained resilient. It recovered nearly 100 points from the day's low yesterday to close in the green for the 4 straight sessions. In fact, it has been up for 7 of the last 8 sessions as well. Your take on the Nifty, do you think it is likely to make another dash towards 20,000?
It's quite possible that Nifty can make a dash towards the next 20,000. But I want investors to also keep at the back of their mind that all is not well in the financial world globally. So the things to understand is that the US interest rate payments, they have to, refinance their short-term debt. If they refinance the short-term debt at the present interest rates, it's only going to double the interest rate payment. So, as of July 27, it is some $969 billion. And if it goes to $1.8 trillion, it's going to be undeniably difficult to find the money to pay that debt. And then they will have to get into fiscal spending, and the inflation rates remain higher, the rates go up, and internationally, that is what happens. And then Europe gets sucked in, China gets sucked in, and then the entire world will implode from stagflation, that consumer spending will go down and debts will go higher, and then oil prices will go up, and it's a vicious circle. So what we have to keep in mind is that while the going is good, you need to keep at the back of the mind that the macro is deteriorating.
The macro concerns really worrying at this point in time. At the same moment, we'll take a look at how the global handover is for the Indian markets today. We are just about 6 minutes away from the pre-opening of the session today. Remember, Wall Street's 3 major indices closed lower on Wednesday, with the Nasdaq's 1% loss, leading declines after a stronger than expected services sector data, fueling concerns that still sticky inflation would mean that interest rates could stay higher for longer. So you had the Dow Jones, the Nasdaq and the S&P 500, all of them declining in trade from anywhere between 0.5% to over 1% in yesterday's trading session. This morning, we also saw the Asian markets opening lower in trade following a sell-off on the Wall Street ahead of the trade data from China and Australia. Remember, Chinese imports and exports for August are forecast to fall about 9% on a year-on-year basis, and therefore you can see a subdued move. On the other hand, the GIFT Nifty has indicated a muted start for the Indian markets as well in today's trading session. The FIIs, however, continue to be net sellers in the Indian equities. 3,245 crore rupees of shares is what they sold in yesterday's trading action. However, domestic institutional investors also offloaded anywhere about 247, 248 crore rupees worth of shares too. I wanted to understand from you, Mr. Bolinchkar, how are you looking at the continuous sell-off by the FIIs? What is pushing the FIIs to stay away from the Indian markets, and is that increasingly going to be a concern?
So, let's look at what's happening in the US again. Just to get it's a sample of, where the data is readily available. So you can imagine what is happening globally. The savings rate post-pandemic was about significantly higher. Today, the US has reached a stage where after this month, their entire cumulative savings of the Americans will turn negative. That means they will resort to debt. Already I told you how bad the situation is at the fiscal level. So if the debt at the individual level goes up, and if there have been money flows out of the banking system into the money market funds, now we will see, with the savings rate eroding, people either resorting to debt or selling their family silver, which is a mutual fund investments, to fund their daily living. And that is going to have a toll on India funds which invest in the Indian markets, where we'll see sell-offs happening, right? So to expect FIs to pump in fresh money can only happen if allocations to India go up. Else, we could continue to see sell-off.
Okay. Another point I wanted to discuss with you is the constant increase in the oil prices that we are seeing. The Brent is inching now to closer towards the $91 a mark. As and when the oil prices rise, it becomes a concern for India because it's an oil importing nation. We had been seeing oil constantly around $80, $85 a barrel for the last few months, but sudden spike in oil prices. What does that mean for the Indian markets at large?
So this was inevitable with the US SPRs going down and Saudi and Russia, extending oil cuts till the end of this year, and with the winter coming in, we're in that part of the time when the cycle is up annually, right? And we're seeing oil prices goes up. Now di- remains to be seen how much discounts we kind of get from the US, from Russia. If we get discounts and things remain placid, then there's no case for worry. Secondly, government has already taken a little bit of a rate cut in terms of LPG prices coming down. And government at this point in time has two options to elevate the problem for the retail public at large. So what are these? One is that you can keep the excise duty on crude oil constant instead of making it in percentage terms, so that even if the price goes up, the effect of uh, the excise duty hikes remains constant. So you can temper the rise. Second thing is India has almost 1,20,000 crores of oil bonds repayments over the next 3 years. I'm sure that we can get these refinanced for a longer tenure period. So this does not unduly precipitate the situation. But having said that, we have to understand a couple of more things. Is that, as I told you, if the US implodes, China will implode, and if China has to take care of its exports, they will have to devalue their currency, and Indian markets either raise the rates or sharply devalue, right? So I think we are in a catch-22 situation, and that is why also the FIs are preempting any kind of a hike that might come in.
Okay. Let's quickly look at all the stocks that one needs to watch out for right before the pre-open hits. First stock that you need to keep on your radar today is Reliance Industries. Remember, Reliance Retail has now signed a JV agreement with Alia Bhatt's Edamama for 51% majority stake, so an acquisition right there. Remember, the shares were slightly up in trade at 24.27 in yesterday's trading action. We'll keep an eye out on this one. TCS is another stock that you need to keep an eye out on. The company has announced an £800 million pact with JLR Digital Unit to drive its reimagined strategy going forward from here. The stock again in yesterday's trading action was at 34.29. We'll keep an eye out on how it moves today. After this news, Tata Consumer Products, however, we were discussing how there is reports suggesting that it is looking to buy a 51% stake in Haldiram's, but the both companies have denied such news reports. The stock was up about 0.3% yesterday at 878. We'll look at how the reaction comes in today after the clarification from these companies. From the pharma pack, you have Lupin that is going to be in focus in today's trading action because it has collaborated with Mark Cuban Coast Plus Drug Company and COPD Foundation to expand access to medication for COPD patients right there. The shares had ended a percent or half odd percent high at 11.45. We'll look at how the stock, in fact, it was ending at 1%, 11.31 yesterday. This is the pre-opening action that you're already looking at on Lupin. Biocon Biologics, that's Biocon you have to keep in mind because the subsidiary of the company, Biocon Biologics, has completed the integration of Viatris biosimilars business in North America. This was long awaited, and now that it is taken into account, the stock may actually move sentimentally. REC has signed a $100 million foreign currency term loan agreement with Exim Bank. The stock could definitely be in action today. A percent higher in the pre-opening trade, 237. Responsive Industries, that company has won a contract from Indian Railways for its Garib Rath initiative, and the stock was marginally down in yesterday's trading action. Let's look at how Responsive Industries is moving up. 5% almost higher in the pre-opening trade, 269. So the stock is reacting to the news flow too. The markets, especially the Nifty, is higher by about 110 odd points in the pre-opening session, 19,720 currently. The Sensex, however, is looking down 135 points lower at 65,744. But we'll keep looking at this space. It's still unstable. We'll wait for the prices to settle down in trade right now. Meanwhile, when we look at the top Nifty 50 movers in the pre-opening trade, you have Tata Consumer Products that is somehow trading at around 874.9 in the current levels. You have Divis Laboratories, Bharti Airtel. These stocks are one of the top gainers in the trade today. We'll come back to all of these stocks as well. But let's look at what Reliance Industries is doing in the opening trade. After the JV that Reliance Retail has signed with Edamama. Let's see if there's any move on Reliance Industries counter on that. Flattish at this point in time at 24.27. TCS, let's look at that counter too. The heavyweight company that's now signed a major deal with JLR for the 5-year contract that it has signed. About 0.8% higher in trade, so the momentum is building up on TCS 34.57. Mr. Bulichka, your thoughts on the opening of the markets and anything that you've spotted so far?
No, it's as I told you, in the backdrop of the international markets, the way India is holding out is simply amazing. It really speaks about the inherent strength of the economy. But as I told you, we need to keep in mind all the other worries that we discussed.
Okay. Since you had talked about the financial names, I wanted to discuss with you, Mr. Bulinchkar. A lot of brokerage houses, especially Morgan Stanley and Macquarie, have come out with their reports on the big banks and the financial names in today's trading session. We've seen Morgan Stanley report on ICICI Bank, where it maintains an overweight rating with a target price of 1350. On Bank of Baroda, it has an overweight rating with a target price of 235. AU Small Finance Bank, it has a target price of 925. An overweight rating again here. While Macquarie has given an outperform rating on HDFC Bank with a target price of 2110. We have seen the Nifty Bank and these major private banks really underperform of late. It has not participated in the market rally. Your thoughts on how should one be really approaching the big heavyweight private banking names right now? You did tell me in the previous discussion that we had that you're more tilted towards the PSU banks with the kind of momentum that we've been showing and the attractive price points, valuation that they're trading at vis-a-vis the private banks. But at some point in time, the markets will realize the potential that the private banks will also have going forward from here. How should one be really approaching the private banks right now?
So I continue to maintain my stand that public sector banks make a great investment option vis-a-vis the private sector banks. Primarily due to the fact that the business fundamentals, there is no competitive edge between the two players. I believe that the private sector banks' valuations are very rich. That is not to say that they will not outperform, but the valuations of the PSU banks are significantly lower. So the price appreciation potential in the PSU banks is lot much higher with lower risk at play.
Okay, got that. Another space that is of interest to all the brokerage houses this morning is also the IT pack. We're seeing Nomura come out with a detailed report on the IT space. It has given ratings for all the top majors, Infosys, TCS, HCL Tech, Wipro as well. Most of these companies, it has maintained either a neutral or a reduced rating on the companies. In Infosys, it is given a 1410 target. On TCS, it has a 3040 target. On Wipro, it has a 420 target price, which it has raised. And it has also raised HCL Technologies target price to 1220 right now. Tech Mahindra also raised the target price to 1470. LTI Mindtree, again, the target price has been raised to 4585 at this point in time. How are you looking at the big ticket IT names? Again, these have not been great contributors to the markets all across 2023. But long-term perspective, do you still feel that IT is a contra buy at this point in time, or more or less it is likely to become a consensus buy going forward?
So I have a contra view to what the market is saying. I believe that there is value at risk in IT stocks. Reason being that they're very, very highly dependent on the US markets. We've just discussed the US markets. at length in terms of business and the macro in the US markets.
Hmm.
While tech spend remains a very, very intense activity everywhere. The more the world implodes, the more you would want to be tech enabled to cut costs,
Hmm.
right? But your business resilience has to be there, and that is not being witnessed in the US markets. Also, the dollar is at risk. So I believe that we need to be careful with these stocks. Uh, and if you have been careful in these stocks over the last 5 to 6 months, you are not losing out because the domestic themes have performed miraculously. And if you ask me today, the strength of these trends is absolutely intact. So if you take railways, you take defense, you take infrastructure, all these trends, if you talk of the pharma, you talk of other industries, absolutely the trend is intact. So, why waste your time on something which is going to underperform? So, given that, I think energy should be placed in sectors where you are sure of the run rate, and hence I choose to keep away from IT stocks.
Keep away from IT stocks. But is mid-cap IT, the momentum that we've seen of late, stocks like Birlasoft, Persistent, Coforge, Emphasis, the kind of move that we are seeing, what are you making sense of this kind of a move, and how should one approach the mid-cap IT basket then?
So again, there I have not fared well in my decision making, but I've kept largely away from IT stocks.
And you
And
would,
I still continue to hold that view.
okay, fair enough right there. But before the markets open, any of the sector that you're more bullish on for today's trading session, and any stocks that are coming on top of your radar?
I think SAIL is one stock which can do well. The other are the paper stocks. We recently had some brokerages come out with buy reports on paper stocks. And the way the government is and the way the market is, phasing out plastics, I think paper is going to come to the fore. We are going to see persistent growth rate, and their raw material costs are, falling off. So I think it's a very sweet spot for the paper industry. I believe that uh, one and all will do relatively well this year.
Okay, so first let me talk on sale especially. You talked about that, you're positive here. What are the target prices that you're recommending for sale, and what would be the time duration that you're looking at?
So I think over the next 2 3 years we'll see some very very good returns come up from sale. We are still working on the business model, so I would not like to stick my neck out and put out a target.
Okay, and for paper stocks in pecking order, any particular stocks that are coming on top of your radar?
I think one Andhra paper stock is looking good.
Okay.
JK is obviously the market leader. And there are a host of others that you can pick up from West Coast Paper, Satya Industries. These are some stocks that come to mind.
So usually, we do see cyclicality here in the paper segment, but do you think this story is going to become into a larger structural story going forward?
Absolutely. So, as the packaging industry structure changes, as we become more uh, dependent on paper. So, I'll give you an example. My regular snacks, which I buy from a roadside thela,
Yeah,
he would pack everything in plastic. This
yeah.
time, he is giving me paper bags. So, even at the granular level, at the most, at the level where on the roadside, where the vendors would, you know, use plastic because it's cheaper than paper, even they are being forced to use paper. So, if that is a trend change, then, we are going to see substantial demand for paper kick in.
Okay, so you took the names of Andhra paper, JK paper, West Coast paper. Any of the targets that you'd like to recommend here for investors out there?
Uh, like 15 to 20% price rise are uh, easily achievable.
Over the next 1 to 2 years is what can I take?
Yeah, yeah.
Oh,
18 months is absolutely.
18 months. Okay, 18 months, next 15 to 20% in case paper stocks is what you're looking at. Andhra paper, JK paper and West Coast paper, some of the paper stocks that could give you an upside of 15 to 20% out there as well. Okay, Mr. Bulinshkar, I was discussing with you yesterday as well. As we inch closer to the weekend, the excitement around G20 is really high, and this will be the end of the summit and the 1 year long presidency of India. Of course, we've had a flurry of meetings out there. There is an expectation that there could be the summit could end with a declaration on the agreements that most of the world leaders have come on to. India had kept sustainability as the core issue this time around. The key themes that one can really bet on amid G20 as a larger, and a trigger for the markets right now.
So I think absolutely the hospitality industry, I think, and the tourism industry. Uh, Definitely, as I told you yesterday, also Indian hotels is my go-to stock. The
Yeah.
reason being that the capacity over the next 3 years that is going to be added, 25% of it is coming from Indian hotels. And if you see the ARRs, what they have been under severe stress for the last 20 years, and they are now just breaking out. So I believe that Indian hotels, with its portfolio of beds across various sub verticals, stands to be the biggest beneficiary.
Okay, Indian Hotel stands to be the biggest beneficiary of G20. Hotel space is clearly an upbeat space to be in right now, and the tourism sector as well. On Indian hotels, we also have Jeffrey's report in today's trading action, where they have given a buy rating on the company and the target price of 445. That's an upside from the current levels. 432 is what the stock is trading at, with an uptick of 0.1%. Any particular target that you have, Mr. Bullichkar, on Indian hotels over the long
So
term?
we had initiated about 2 years back. Then the price over 200 odd, and our
Okay.
targets were about 440 till FY26. You
Mm-hmm.
know, so typically we expect targets to be achieved 1 year ahead.
1 year
So
ahead. Okay.
yeah, so you're looking at 440, 450. We are very much there, but
Mm-hmm.
that is not to say that the stock is to be sold into. Uh, new data comes in, new ventures are abound, and the stocks keep getting re-rated.
Okay, the stocks keep getting re-rated like that. The markets are getting settled in the pre-opening session, slightly down in trade for the Sensex and the Nifty. The Nifty trading about 12 points lower at 19,598 currently. The Sensex also about 26 points lower at 65,854. Let's look at the broader markets, especially the Nifty Next 50. That's still doing better, about a 1/10% of a move on the upside. The small cap 100 index, clear winner among the broader market space. It's up about 0.4% odd in the early trading, in the pre-opening trading space, just about a minute away from the opening session. Mid cap 100 index, again 40,284.2% higher in trade. The sectors that are likely to be buzzing again today is the oil and gas space. That is showing some kind of an uptick in the pre-opening session. Consumer durables again, you do have some uptick coming in on the private banks also today. Healthcare was a clear winner yesterday, remains in an uptrend, but it's the autos and the FMCG pack that are still, FMCG largely, that's still struggling. Okay, we're getting the momentum now building up. The markets have opened, and you are able to see a 75 point of a dip on the Sensex, 65,815. The 19,590 marker remains at open, 22 points lower for the Nifty as well. Clearly, it's the small cap index where all the action is, 0.3% higher in trade. The top, sectoral mover. You have oil and gas as the top sectoral mover again, 0.08% higher. Mid caps up by 0.1%, flattish absolutely. So you can see, volatility clearly in the opening session. Even on the Nifty 50, it's the ONGC counter that's looking higher at about 183 odd levels currently. Apart from it, mixed trend clearly. Consumer durables flattish, private banks down in trade, financial services down in trade, Nifty Bank slightly down in trade again. Which are the stocks that are moving higher in trade? Because you're seeing the benchmark indices clearly just trading at the flat line or below it, be it Sensex, Nifty, the Nifty Bank, or the Mid Cap 100 Index, which is absolutely flat, 1/10% higher in trade. Maruti Suzuki 0.07% higher, Kotak Mahindra Bank 0.2% higher, Dr. Reddy's opens 1/4% up, Bajaj Finserv, that stock opens slightly higher in trade, HDFC Bank slightly down 0.06% down in trade right now. You're also looking at Tech Mahindra down by 0.4%, NTPC down 0.3%, Power Grid down 0.7%, LTI Mindtree 0.5% lower in trade. ICICI Bank, IndusInd Bank, HDFC Bank, all these private bank counters down in trade, about 0.1% lower in trade. So the banks, financial services, they are not contributing. But let's look at what is really ticking up in trade. So let's look at the small cap counters that are showing some promise. You have Amber Enterprises constantly higher, 4% uptick in trade. EID Perry, remember the sugar space stocks have been in an uptrend, so you have 2.5% move on that one. Rail Vikas Nigam, RVNL up 1.5%. Sapphire Foods up in trend. GMM Fodler, Housing and Urban Development, Metropolis Healthcare, all of these stocks are buzzing in the small cap 100 basket. From the Nifty 50, it's Dr. Reddy's, that's up by about 0.7%. You have L&T, Larsen and Toubro, 0.5% higher. TCS is moving up in trade now, 0.2% higher in trade. ONGC, that's 0.5% higher in trade. SBI, you have about 0.1% higher in trade again. Divis Laboratories from the Pharma Pack is also moving up. SBI Life, again a winner from yesterday's trading action, moving up in trade. But a whole host of stocks let's look at from the PSU bank space that is moved up suddenly. So let's look at any of the stocks that are buzzing from this space. UCO Bank, 1.1% higher. Indian Overseas Bank, Central Bank of India, Union Bank of India, 1.5% higher for this one. So the gains are very, very limited, but you do have some upticks coming in. On the F&O space, it's REC that is leading as the top gainer, about 1.7% higher, followed by Metropolis Healthcare, PFC also. So RFC, PFC both are up in trend. NMDC, Muthoot Finance, these are the stocks that are moving up in trade. Let's look at the mid-cap 100 basket too, and the stocks from this basket that are moving higher in trade. So as far as the mid-cap stocks are concerned, railway stocks up in trend. IRFC, again another 4.5% move on the top after declining for yesterday and day before yesterday. CG Power up by 3.5%. Devyani International up by 2.5%, 3% odd. REC, Tata Teleservices, Power Finance Corporation again. So both in cash and in F&O space, these are the buzzing spaces. PB Fintech, Policy Bazaar, that's moved up in trade. Deepak Nitrite, that looks to be moving up in trade as well. Vineet, your thoughts on the market opening? Any stock that has caught your eye?
So I think one stock which really caught my eye was UPL. It's moved up very handsomely. Deepak Fertilizers is moving up. So, we are trying to get a sense of the fertilizers and the agri-chemicals doing very well.
Yes.
So, I think that those are neglected counters or sectors, and they could emerge dark horses over the next couple of quarters with very low downside risk.
Right. So Fact has been one company that has been moving up from the last 2 or 3 odd sessions. Let's pull up fertilizers and chemicals counter as well. That stock has moved up pretty sharply in the last 3-4 odd sessions. What is your take on Fact? Today it's slightly down.
I don't track that stock, so it's very
Acha.
difficult.
So the best play according to you in the agrochemical space would be Deepak Fertilizers or?
Deepak Fertilizers primarily because from next year their new TAN capacity fires up, and that's a significantly largest capex, and that will have immediate benefits. So that is one stock which looks very good.
Okay. What is your take right now on the railway space stocks? Again, RVNL, IRFC are back in action in today's trading space. Nobody is questioning the quality of management or the quality of growth possibilities, but valuations in railway stocks is something that is, getting people jittery at this point. Your thoughts?
So, that also has me questioning the growth. But, these are two sectors, defense and railways, where the opportunity size is so big. Okay, and every time the government comes out with one of its new packages, there's it's a mega application. So then you have another round of growth taking place. So it's very imperative for these, consumers should keep one thing in mind, that the focus of this government is on infrastructure. Railways is very key to the government. Localization of defense is very key to the government. And if there is a if if there is a if at all there is a possibility that this government is not coming to power, then which is a remote sign, but if it does happen, then these stocks can really tank. So you
Okay.
need to keep risk reward measures in mind before getting into these counters.
Okay. What about REC, PFC, these kind of shares that are ticking up again? Of course, power has been a hot theme over the last 1 or 2 odd months, and all segments, be it power generators, transmitters, rectifiers, financiers, all of them have been moving up in tandem. What is your own thought in the REC and PFC?
So
Any
it's
thing? Yeah.
absolutely a blitzkrieg space to be into, and REC and PFC are the best way to play it because you need to fund these, right? And all these projects come at a 3:1 kind of funding cost. So the biggest beneficiaries of all these are going to be the power financiers. So REC and PFC are going to do very well.
So, what is your own take? Any targets that you'd like to recommend? REC, PFC?
See, they're still at 4 to 5% dividend yield. You know, after having doubled, if you're getting a stock at 4.5 to 5% dividend yield, I'm going to continue to be a buyer of it.
Continue to be a buyer. Okay, got that. Apart from this, we need another space that is, coming on our radar is again something that I think day before yesterday when we were looking at the market opening, Devyani International is coming up again in trade today, along with its Sapphire Foods. So Devyani is up by about 4% right now, 4.2% at 221. Sapphire Foods also moving up. Jubilant Foods, we also have Macquarie report here, which maintains an underperform rating, however, with a 330 target price for this one. How are you looking at this QSR space amid, G20, then upcoming World Cup? We have the festive season going forward. What is your own sense of how should one look at these particular stocks from a short to medium term
So
perspective?
very specific to Devyani, I think we track it very closely, and I think there's a good chance of another 15 to 20% upside, and
Okay.
you will keep getting this every year. These are those stocks which are going to be compounders. So you're not going to see the sixes and the fours being hit. It's a steady 1 or 2 runs. You'll have some months of you know underperformance which we saw over the last 6 months. Now the stocks have picked up, so they're on a steady uptrend, and they keep wiggling around that. And if the wiggle on the lower side is longer, then there will be a spike which takes it to the higher part of the channel. So I expect that this trend will continue to play. India is a very, very underpenetrated market. These guys are only spreading their wings, and they've got the best playbook out there. So I am a big buyer of Devyani, a very big fan of the business.
Okay, so 15-20% higher is what you expect the stock to give. And, on a CAGR basis, you believe that the stock can continue to give you that kind of return if you're a long term investor. Is that right?
Absolutely, absolutely.
Okay, Devyani International clearly up 4.5%, a pick by Vineet from this one. Okay, let's also get another guest at this point in time. Rajesh Palia joins in. He's the head of technical and derivatives research at Axis Securities. Many thanks, Vineet, for being with us and sharing all the pre-opening and opening action and sharing all the stocks with us so far. Let's continue discussion with Rajesh. Rajesh, your thoughts on the market opening, weekly F&O expiry, and how do you expect the expiry to turn out to be?
Morning, Sakshi. So, there was a call writing activity in the previous session around 19,600, 19,700. So, that pressure is likely to be there for this weekly expiry. So, until the Nifty not able to cross above 19,620 on a weekly closing basis, some pressure is likely to be there in the market on the higher side. Above 19,650, yes, we can see a short covering action in the Nifty, and then possibly Nifty can scale up to new all-time high level also. So 19,650 is the key level to watch for on the coming trading session. For expiry, this weekly expiry, we do believe that it's going to be a muted kind of expiry today in terms of indices. 19,500 is having good put base support on the downside. So if you get any chance to Nifty to buy around 19,520, 19,500 as a buying opportunity, your stop loss should be around 19,480 for the day, and you can hold your position. And again, in the pullback, you can book profits around 19,600, 620. So very range bound activity we are expecting for Nifty. But Bank Nifty is showing different behavior. Uh, Still, the large cap banks are not participating in this upward momentum. So that is still lacking in the banking sector. But PSU banks are showing different behavior. So we do believe that PSU bank can continue, but the private banks still remain in under consolidation. And for Bank Nifty, the major important resistance area on the higher side is around 44,700. Until these levels are not taken out, Bank Nifty may also remain under pressure. On the lower side, 44,100 is the key level to watch for. If we go around 44,100 on the Bank Nifty spot, it's again buying opportunity, as overall structure for Bank Nifty is also bullish side. So buy on dips is the strategy for both the indices.
Okay, got that. Buy on dips is the strategy for both these indices. Two stocks from your end that you're looking at today with the targets and stop losses.
Buying action in last couple of trading session, and again stock is almost now trading near to its a day or it's a day high. So Arvindo Pharma one can buy for upside target of 885, 890. Keep your stop loss around 858. The second stock that we like is from chemical space, that is UPL. From oversold trajectory, now stock is recovering, and now stock is forming a base. So we expect now UPL can contribute on the upside. 635, 640 is the target where we are expecting for UPL, and one can buy this stock with stop loss of 600. So chemical basket as well as pharma, these two sector we are expecting that further more momentum we can see in next couple of trading sessions.
Okay. Rajesh, since you're talking about Oro Pharma as well, I wanted to take this discussion to the larger pharma space because, of late we've been seeing a lot of movement in the pharma pack. Even fundamentally, a lot of news flow happening. There are, buyers in the race for Cipla now, Dr. Reddy's, Torrent Pharma. So that action is picking up as well. We're looking at hospital stocks buzzing in trades, the laboratory stocks like Divis Laboratories coming back in flavor again. What is the best way to play the entire pharma story right now? Oro Pharma you picked out as an immediate a direct play, but is there an indirect play also that you'd like to mention here in the pharma pack?
Definitely. So most of the pharma stocks have recovered from their recent low, and now most of the stocks are consolidating. Some of the stocks are showing outperformance. So Aurobindo Pharma is the one of the stock where we are seeing outperformance. But yes, we do believe that in due course, most of the pharma stocks are likely to exhibit further upside from the current level, as the consolidation is showing us that the sign of bullishness. Whatever decline we are getting in the pharma space is meeting to the buying action on the downside. So Torrent Pharma is looking very interesting. Stock is already given a breakout series of higher top, higher bottom formation is already there in the price. Looking at the near-term, short-term setup, stock is available on near to its important support area of 1860. So one can buy Torrent Pharma for positional basis, and we do expect that once stock crosses above 1980 level, then this rally can extend towards 2100, 2200 also for Torrent Pharma. So one can look at Torrent Pharma at the current juncture. Biocon is also looking promising. We have seen post earnings stock has corrected, but now stock is showing a sign of recovery. And now on the weekly chart, stock is now almost on a verge of giving breakout to its last 7-8 week consolidation zone. So there is a flat formation is taking place on the weekly chart. So looking at the Biocon, we believe that if stock sustain about 270 mark, then next target for Biocon should be towards 285 to 290. So Biocon is also looking very promising at the current juncture.
Okay, understood that. So that's as far as the pharma space is concerned. The other space I will discuss with you, which is buzzing in trade again today, is the shipyard space. Looking at Cochin Shipyard, that's the top gainer in the NSE 500 index right now, and it's sharply up by about 8.5% in trade. 1037 is the kind of level that you're looking at on Cochin Shipyard. Very, very strong move, and the volumes are also supporting the kind of move that we are seeing here. Along with it, Garden Reach Shipbuilders, which has been the top pick of one of our weekly guests, that's Milind Vasudev. He talked about it, and the stock had been on an uptrend again today. Garden Reach Shipbuilders is up by about 4.5%, 3.5% higher at 850. We also have Mazagon Dock, that has been a clear outperformer and a winning story for this year, and in the defense space, that stock is again up by about 3% up in trade. Rajesh, how are you looking at these particular shipbuilder stocks? And these stocks have been in an uptrend. Any particular stock where the chart suggests to you further strong upside from the current levels?
So very strong momentum is going on in Cochin Shipyard. Stock is exhibiting a very strong buying action since last 4 month series of higher top, higher bottom formation is taking place. Since last 4 months, the stock is in uptrend, and the stock is almost enjoying its all-time high trajectory again. Even at the higher prices, there is a strong buying action with volume is taking place. So Cochin Shipyard is looking very promising, and I think the kind of breakout which we have witnessed on the weekly chart in recent past is clearly indicating that this momentum can extend further towards 1100 1150 zone also. So those who have already bought at lower level, they can now trail their stop loss towards 1020, hold your position for 1100 1150 target in the near term basis. Again, Garden Rich is also looking promising. Again, stock is almost trading near to all time high, and the kind of consolidation breakout which we are seeing on the weekly as well as on the monthly chart is clearly showing that 950 is the next target for Garden Reach, and so one can hold here also a long position with stop loss of 810. Majgaon is already trading near to all-time high. We have seen a very strong buying action last couple of week, and now stock is consolidating in very narrow price range. One can hold even any decline if you get around 1900 is a buying opportunity for Mazgaon Dock also. Keep your stop loss at around 1860, and then next target for Mazgaon Dock towards 2020 to 2050 in the near term basis. So buy around 1900, keep stop loss of 1860. So all three stocks are looking very promising, and this sector is buzzing, and I think this momentum can continue furthermore in the coming trading sessions also.
All right, the momentum can continue. The shipyard stocks definitely moving up, and the momentum may sustain going forward. Thanks a lot, Rajesh, for being with us and discussing all these important stock ideas with all our viewers. Let's now shift focus to our corporate radar section. The company on our focus today is Gokuldas Exports, and the company's management is joining us now. Siva Ramakrishnan Ganapati, he's the Vice Chairman and Managing Director of Gokuldas Exports. Very good morning to you, sir, and thank you so much for taking the time out for this discussion. Well, a stock like yours has been in clear commentary of all everyday, news market commentary because of the kind of performance the stock has really given over the last few days. And, of course, the news flows have been pretty strong. You've been bagging orders, and that has been taken very well by the stock markets too. At 769 odd currently, about 0.5% lower in trade. But the gains for 2023 have been excess of 100%, meaning the stock has doubled so far this year. So clear winner and wealth creator for all the investors. So congratulations for that. I'll just first talking to you about the latest agreement with the Atraco Group is what I want to begin the discussion with. And I want to understand from you, which is a leading apparel manufacturer, $55 million is what you're going to be paying for acquiring at the Atraco Group. What is the idea behind this acquisition, and what are the advantages that you're looking at? What would it really add on to your own company going forward?
Thank you and good morning. Atraco Group brings in certain capabilities which we don't have. One, it gives us presence in low-cost geographies. So currently all of our manufacturing units are in India, and we were looking at expanding, but expanding where the local geography would ensure that we have a sustainable advantage for next 10, 15, 20 years. So this group has got manufacturing facilities in Kenya and Ethiopia, where the cost of manufacturing is expected to remain low because of the wage rates there. Secondly, these countries enjoy duty-free access to US and Europe. That's a big advantage as there is a huge arbitrage there. Kenya goes duty-free to US. Both Ethiopia and Kenya go duty-free to Europe as well. So that's another plus point. The company has customers which are complementary to us. So there's only one overlapping customer. Otherwise, all the customers are different. So which allows us to cross-sell to one another. And it's a very well-run management. It's been around for over 3 decades. So the learning curve has all been baked into the performance of that company. That if we go and set up something fresh and new in those places, we will take at least 5 years to get a grip on the business and get a grip on operational efficiencies. Here we have something which is running very well. So it met multiple objectives for us, and that's how we ended up doing this.
Perfect. So how are you looking to fund this acquisition? Would you be also looking at any taking any incremental debt for Atraco?
Yes. So at the moment, we are a debt-free company. I mean, we have net cash on the books. However, for this acquisition, we intend borrowing about 40 million US dollars. The balance, that's 15 million, will be paid out of our internal accruals. So that's how we want to conclude this deal.
Okay. Could you also tell us, what is the current utilization level of the company, and do you plan to add any capacities going forward as well?
Sure. So they are currently at about over 85%, and we expect that to go to almost 100% by end of this year itself, looking at the order book. And we intend to add capacities going forward. So over the next 3 years, we would like to see about 25% plus growth there. And towards that, we would add some capacity. There is one new factory that they had established, and we believe that there is an opportunity to increase capacity in that factory, as it is it's not fully laid out. There are a lot of machines that we can put in that unit. So that will drive our near future growth.
Okay. After the Atraco Group's acquisition, what is the margin outlook that you have for this acquired asset and on a consolidated basis for your company? If I can ask you for FY24, what's the outlook, FY25?
So Atraco's calendar 22 margin was about 10.5% EBITDA margin. We believe that in about 3 years we can improve it to over 12% in line with our EBITDA margins. So it will require some amount of upgrade of plant and machinery, some amount of capacity growth as well, and all of that will happen over the next 2 to 3 years. That's our trajectory.
Okay. Also, if you could tell us what is the peak revenue potential that you can look at for this acquisition for, say, FY24 and the coming years as well, FY25, FY26?
So FY24, the acquisition has just been, we have entered into agreement, so it's just been signed.
Correct.
But by the time that the acquisition will take effect, after all the regulatory approvals, we expect that to happen towards the end of this calendar year. Okay. So effectively in FY24, we may have very, very little revenue for the fourth quarter only coming in, or partly third quarter and fourth quarter. So if I look at FY25, I anticipate that the revenue from this asset should be in excess of 100 million, maybe 110 odd million. That's what we are gunning for at the moment.
Okay. So, for your own internal targets, if I can ask you, if you've set for yourself, I think for Q1, the profit and the revenues were slightly down in about 15-17 odd percent. The revenues were somewhere around 515 odd crore rupees. Do you have an internal target for yourself, maybe over the next 3 to 5 years? What is the kind of revenue that target that you want to reach to?
So I'll separate this question into 2 parts. One is the quarter-on-quarter part. So if you look at our numbers over the last 3 quarters, that is Q3 and Q4 of last quarter and Q1 of this quarter, we've been fairly flat on a linear sequential basis. And the reason is that the markets have been tepid. We export to United States primarily. and the other major countries are in Europe. So both of these markets were beset with inflation, and there were excess inventory with the brands that buy from us. So that softness in market continues. We anticipate this to continue into Q2 as well. And post that, from the third quarter onwards, based on the trajectory that we are seeing from an order perspective and the inventory position with the brands, we are seeing a year-on-year and linear quarter-on-quarter growth. So the order book kind of supports that. So I see that from FY25 onwards, we that's 24 to 25, we should be back to that 15-20% YOY growth. In FY24, I think because the first half has been facing quite a bit of headwinds from demand perspective, we see pickup in the second half in H2 of FY24.
Okay. Sir, I also wanted to understand, what is your own sense of the industry's growth, the demand trends that may follow? We are at the onset of the festive season right now. There's a lot of excitement around, additional events. We have the G20, we have the World Cup happening, we have the, a beauty contest being taken place. A lot of big events taking place in India that may again raise awareness about, Indian culture, Indian heritage, and of course, apparels is one of the industries that may get, people talking about it and interested about it. The tourism space that is getting excited, and of that, with that comes a lot of shopping, and of course apparels make for that as well. I wanted to just you to paint a picture for all our viewers. What is the sense of the demand trends going forward from here amid the festive season? Where is the industry placed at, and in the long term, where does the apparel industry really look at growing to?
Sure. So we are an exporter. So we really look at markets, particularly the Western world. We export to rest of Asia as well. So events in India can only give a positivity from drawing attraction to suppliers in India. But we are not really dependent on Indian market in that sense. So coming to what I see as industry trends, the good news is that industry continues to grow. Globally, the population is growing. Particularly, industry in Asia is growing. So demand in Asia will keep growing. Indian industry itself, Indian apparel demand itself will grow by 9 to 10%. So that's a good upward traction that you can see. Now, from a supply side perspective, it's very interesting. So China is a very, very big supplier in the $500 billion apparel market. And China's cost of labor has gone up pretty significantly. It's well over $500 a month. So that's very expensive, and the availability of labor is challenging. And this is also becoming an issue in Vietnam, which is another apparel exporting country. So the high cost regions will eventually shed business, and that's happening. And which countries can pick that up? Bangladesh, India, maybe Indonesia. Indonesia is also expensive, and that is one movement we are seeing. Second, government of India is talking of FTA, and we are in negotiations with United Kingdom, Canada at the moment, and maybe and even European Union as well, though that is some time away. So if, let us say, this FTA happens, that makes our goods far more competitive. Today, Bangladesh goes duty-free into UK. If we get a duty-free access into UK, that brings us at par with Bangladesh and 12% cheaper than China. The 12% cheaper than China is significant. So there is a huge opportunity that will come to Indian apparel manufacturing industry. So there are such tailwinds which are forming in favor of India. And I feel that would result in a lot of Indian capacity creation and growth for Indian apparel industry.
Wonderful. Sounds very good at this point in time, and we hope then these tailwinds definitely fructify for the Indian apparel manufacturing industry and companies such as yours. Not many people would know out there. From our viewers' perspective, I just want to tell them that, if all of you have been spotting brands like Gap, H&M, Adidas, Puma, or even Zara, there's a good chance that Gokuldas Exports has manufactured all of these clothes as well. That, take a U-turn and come back to you as well in your wardrobes as well. But that goes to your kitty, since Gokuldas is the country's largest exporter and manufacturer of branding clothes. You've struck gold, most of the experts say, with the latest acquisition of Atraco. Are you looking at any more inorganic opportunities, since you do have net cash on your books right now?
So it depends on the opportunity. We're not actively seeking it at the moment. If something comes by, we will evaluate. But at the moment, no, we're not actively seeking it.
Okay, understood. Well, many thanks sir, for being with us on this special edition and discussing with us the insights about your business, the growth opportunities that you're looking at. All the very best to you for the coming quarters as well. And here's hoping for many more interactions to understand, how the industry is also shaping up as well.
Thank you so much.
Thank you. And with that, let's quickly look at a wrap-up of the markets right now as we inch closer to the end of this this special edition. About 0.25% of a decline for the Nifty 50 and the Sensex right now, 19,566, the current level. And when we look at below the surface, you do have the small caps and the mid caps continuing to tick higher. About 0.5% of a move on the small cap 100 index, 0.4% of a surge on the mid cap 100 index as well. It's the PSU banking space that's now pulling up the markets, 0.5% of a move on that one. The realty stocks are taking, the top spot as well among the sectoral indices. Oil and gas moving up, consumer durables, autos also slightly up in trade. But what's putting the pressure? It's the Nifty bank that's still not contributing to the markets overall. Within that, it's the private banks and the financial services not really supporting the PSU banks in today's trade. Healthcare index and the FMCG space has also slipped slightly in trade. The top gainers on the Nifty index, Coal India tops the charts, 1.2% higher. Dr. Reddy's follows Maruti Suzuki. You have UPL that's been talked about by both of our analysts today, Vineet Bolinchkar and Rajesh Palia. They both have been looking at UPL as a promising stock. You have SBI, Tata Steel, Tata Motors, all of them up in trade. But the shipyard stocks in the NSE 500 space, Cochin Shipyard, Mazagon Dock, Garden Reach is the space that's been buzzing very, very sharply. Along with it goes the railway pack, IRFC, RVNL kind of stocks. And of course, the QSR chains, Devyani International, Sapphire Foods. These are the kind of stocks that are buzzing the most in trade right now. REC, PFC, the power financiers also moving up, and the momentum is likely to continue. So that's where all the stock spotting is really happening in today's trading action, and we'll continue to track the market move for you and all of the stocks that you need to keep on your focus list today. So do stay tuned onto with us on Business Today TV. What you should also get ready is for our Market Master series, where you will be seeing Atul Suri share with you key insights on how does he pick stocks and help you perhaps think of ways to create a winning portfolio. For this special session coming up on the coming Monday, then you can actually send us all the queries on 730-3080-488, and you can send us these questions by about 4 p.m. this Saturday, that's September 9th, and on the 11th of September at 12:30 p.m. we will get you live interaction with Market Master Atul Suri.
We're in G20 week, and I know a lot of you are wondering what's the big fuss about the national capital, about how Delhi is changed. I'm here at the IGI airport, as you can see. I'm going to be taking the route that our G20 world leaders are